Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great weekend as we are coming into our beginning of the week. Markets are down a little bit this morning, about 1.5% in the S&P, about 1% in the Nasdaq. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates as they happen. Stay tuned till the end of the video, and at the end of the video, I'm going to go over just real quick. I've had a couple people ask me specifically about trend identification, so I'm going to talk a little bit about that at the end of the video. So I'll go fairly quickly today. I want to make sure that I can share that. All right, let's go ahead and dive right in. All right, so let's go ahead and get rolling with the S&P. Like I said, we're down about 1.5% this morning. We are seeing that we have come down in the overnights. Now, we did rally back up last night after gapping down to kick off the evening. We rallied back up. We did talk a little bit about potential for the gap and go trade, and that gap and go trade didn't really give you entry until the last 2 hours or so, knowing that we're not looking for any shorts unless we would get basing in front of a decent breakout level. Now, with price falling the way that it did, we do have a potential area here that might be worth taking a look at. If indeed we do rally back up, here's this little wick over wick area right here. Followed by this area up in here. Now, to me, this second area up here is going to be a bit better because this is right there at the European market open. European market opens are typically going to be better time of the day for me to identify where some of those areas come in. The wick over wick level, also a pretty strong area of opportunity. Now, my big picture trend is still telling me that we are buyers because my 4-hour trend has not yet shifted, and we don't have a lower swing low and lower swing high, although we're close to possibly getting that. We don't have that in the S&P. We do in the Russell, however. And I don't normally cover the Russell on the daily market commentary, but we did last night in our live trade room, and so the Russell actually just gave us a little bit of a breakdown, so keep an eye on the Russell if you're looking to get short. All right, Nasdaq. In the Nasdaq, we had this little wick over wick area up here as a potential. Never did make it quite back up to that level. The Nasdaq is probably not the best one to go short with, as it's our strongest of our markets. And so I would, if you're looking for a long, the Nasdaq is the one that makes the most sense. If you're looking for a short, it is not the Nasdaq today. But we're pretty far away from our closest demand area, which is down somewhere down in here. And our time of day on this level is not great. But that's our closest level of demand. So I think we could see a bit of a pullback a little bit today. Crude oil, good gosh almighty. Crude oil's down almost 10% in the overnight. Now remember, we had this huge gap up, and that was just due to contract rollover. If all we did was look at the actual June contract, you would see that the gap up isn't there, and that price just continued to fall. Now, we did get a gap and go trade. A lot of traders in the live trade room last night took that little gap and go move for a very nice profit. And so the next level, I think, for an opportunity to get short would be somewhere up in this region. So let me go back to the full contract here. And then I think it would be right here up and around the European market open, right through that region. Gold last night, we looked at a little 15-minute short, got a little bit of a trade off of there. Not sure, depending on where your stop would have been, if you would have gotten stopped out. I think your tightest your stop would be above this candle's wick. You got a little bit of a 2-to-1 move out of there. It's come back again, but in reality, not a whole lot of great movement from that zone. We could see a little bit of strength happening in gold today, but my 4-hour trend is down for the most part. We are coming into this region, but we're basing in front of that level, which is typically a sign of weakness. So I would keep an eye out for a potential breakdown if we get basing in front of here for a move below 1685. Now, bonds and currencies, I don't really have a whole lot to cover inside of our bonds and currency markets, as we are very sideways in our price action in bonds and currencies. Here we are between our areas of demand and a potential breakout area up here inside of the ZN. So that's in between some close levels. So is the Aussie, as we have some supply up here. Not a great time of day of this supply. And we based in front of it a little bit, so definitely gives it a bit of weakness. You could look to this area here as a potential area for reversal inside of the Aussie, maybe a little bit of a pullback into this region. Inside of the euro, we have another similar potential breakout area above this 1.092 area. Price has to jump above here, get a little bit of basing, and then move above there for me to get a real good picture. And it looks a little bit like a slightly inverted head and shoulders that we could see price move up from that region. And then the Canadian dollar, following oil, I think has a better chance for price to continue to move down, as it's very, very much tied to the oil markets. But once again, not a whole lot in there to cover. Now, Great British Pound and Japanese Yen, as we move over to those two markets, very similar picture in the pound, as a lot of sideways price action. I mean, these kind of markets, patience is a virtue, and it's an important virtue when trading, because you definitely don't want to be trying to force anything. And today's not the day to do that. Just wait for this to give you a strong trend direction and then trade with that trend. And then the Japanese yen, we actually did have a nice little 15-minute move down last night, for those of you in the live trade room. Now it wound up moving about a good 3-to-1 away from its area before then reversing. So hopefully you're able to catch that for a little bit of a move. And now I think you've got this area right here that may serve for a 15-minute reversal. We're still sideways in a price action level, so be aware of those particular areas. Now, I have had a fair amount of people ask me specifically about trends, and I want to make sure that I highlight that, because, looking at this market, one of the things that I want to do is follow what the market is telling me to do from a trend direction perspective. And so when I look at trends, to me, the definition of trend is swing highs and swing lows. So if I think about it like this, swing high, swing high here, swing low. Another swing high, another swing low, right? This is the definition of an uptrend. Higher swing highs and higher swing lows. Now, an uptrend continues until I get a lower swing low and a lower swing high. So by definition, is this the end of an uptrend? Technically, no. Technically, I have a lower swing. I have a swing low that has been broken, but I do not yet have a lower swing high. So I don't have technically, and I've seen on a number of occasions the market do something like this, right? Where we get a lower lower swing low, but then the markets hit some sort of a demand area and then rally very hard back up into this region. Now, sometimes though, you get a picture of a lower swing low while you still have higher swing highs, right? And this is not the end of an uptrend. What happens about now? Well, now I have a new downtrend because I have two consecutive lower swing highs, right? If I look at this swing high followed by this swing high and two consecutive lower swing lows. Now, the most common way to spot the end of an uptrend is actually to see your uptrend do something more like this, where I have a lower swing high, so I still get higher swing lows and higher swing high, and then I get my first lower swing high. Now, by definition at this point, I need to pay attention to this swing low, because a lower swing low than here would tell me that I have a downtrend. Well, once we get below that area, by definition, I'm going to have a lower swing low. So even though I may not have put in a lower swing low yet, once I break below this candle's low, I will have started a new downtrend. And that gives me the opportunity to short. Now remember, this is going to be on my big picture time frame. My big picture time frame is what tells me, am I a buyer, am I a seller? I then go down to a smaller trading time frame to tell me, do I look for supply or do I look for demand? And if my big picture time frame now tells me that we've broken below and I have a downtrend, now I can look for supply limit entries on the smaller time frame. Now, what about selling while we're still in an uptrend? Can I do that? Sure. I just have to use confirmation entries. So it is important to remember that the big picture trend is really what governs my directional moves, and that's what keeps me in trades significantly longer. So if you've got any questions on that, please feel free to send us an email, support@tradersarmy.com. I hope you guys have a great trading day today, and feel free to give us a holler. I'll see you.